Hello everyone, Paul here. Today I'm going to give you guys an update on the stock market strategy that I posted not too long ago. The one that I recommend doing with the 8 EMA. So today I'm going to go over kind of a follow-up and what I've kind of what my current strategy is now. As I'm going over my strategy, I want to explain out to you guys that the information I give you in this video, big disclaimer, information is not financial advice. It's just what I'm currently doing, what I'm studying. It's not a guarantee that if you guys follow what I'm doing that you guys will make money. If you follow what I'm doing, you could you could get gains or losses. So I'm not responsible for any profit or loss for the context of this video. But that being said, I want to go over kind of how, well, the last time, let's just recap a little bit about how, what I said in the last video. And what I went over was, I really use SPY as the only thing that I do with the stock market. I don't do any of the other stocks. I just do options with the stock market with the S&P 500. That's the only one I do right now. So what I talked about in the last video was I basically said you wait. Now what I do is I focus. Now I did spend a little bit experimenting with doing it on the hour, and I had tried the 1 minute, but the 1 minute is don't do the 1 minute. It's too fast for people. And yeah, what I do is I go to the I stick with the day. The day, with looking at the chart, the day is the best. The day is the best strategy that you can do with getting your gains from what I've seen. The disadvantages of doing stocks with options in the day is you have to wait for a long time before your signal to get in with your option. So what I've learned from that in the previous videos, well, let me just go kind of recap real quick. So the formula that I found was I used the 8 EMA, that's the yellow line right here. So just go to moving average exponential and put your input in for 8 and have a bright color, and your line will come look like this. So what you basically do is, what I do is I look on the day and I wait for that moment when the candle either pushes through, there's either a green candle pushing up through the 8 EMA, or there's a red candle pushing down through the 8 EMA. That's kind of what you got to look for when doing the strategy. So we see right here, we see that there's a green candle. This is of the day. So whenever I do my trading with options, I only do the day. So we see that there is a green candle going through the 8 EMA. So if you were to purchase an option anywhere from this range right here, from this candle, so perfectly I would probably do it from where the 8 EMA is. So at this point, I probably would get, at this point in time, I probably would get an option for a call for around 380. So let's just see what would happen. Let's just say 380 right here. Let's say you purchased a call, and let's just say you waited 7 days. Okay, so look at this right here. This is what I kind of want to talk about today. In previous videos, I talked about just getting in, getting out, and we see right here that in 7 days, that would have been a gain of 16.89. So on average here, we got 16.89 And I just times it by 50 because that's usually it's about the delta on the option, it's usually around 50, so that pretty much means around, you get $50 for every dollar that you're right, depending on if it's going up or down. So I just use 50 as an example. So that little move right there is $844 right here. This is $844. What I didn't tend to account in the last video that I made was, if you got your $844 right here, the price is still going up. It's still going up. So you got your gains, but let's just say you got your gains, and I'm like, it's still going up. So at this point right here, when you got your gains, you say, hey, well, I need to get back in. Well, if you come back in at this same point right here, it's going to cost more money. And I've done the research on this because the trend is going up, and it's, it's pretty obvious that it's still in an uptrend because you got out too early. So what I want to suggest, and not financial advice, is what I do is I now base my options on at least 2 weeks, 2 to 3 weeks, and 2 to 3 weeks out from whenever you get right here. So right here, let's just say, for example, you did 2 weeks instead of 7 days. So you did 2 weeks instead of 7 days. That's 14 days. Now, if you buy a option, whether that be put or calls, whether you do that for, if you do it for 2 weeks, it's going to cost more money. But it's going to cost you even more money if you get your gains and you won't come back in at the same price that you did before, if that makes any sense. So anyway, let's just see. If you did 2 weeks from this point right here, so that's the same spot right here, and let's just say you waited 14 days. Okay, so you cashed out now at 29.30. So you're now at 29.30 times 50. So you made $1,500. So what you have to do after you get your gains is you still have to wait all this time. When you do it by the day, you still got to wait. So that's kind of what I want to talk about today. The strategy is whether you come in and you buy an option for, my opinion is buy an option for at least 2 weeks. Because if you do it after 7 days, you're gonna have to wait this. You're gonna have to wait this entire time before it starts going down before you can go back in. And you can see that kind of happens a lot. The downtrends and stuff like that, they usually last around 15 to 30 days. So you want to make sure you make as much gains as you can per cycle. So it is going to cost a little bit more money paying for these options up front because you're buying your contracts for a longer period of time. So anyway, that's all I really want to talk about today. That's kind of the follow-up. If you guys like this video, make sure you hit the like button, hit the subscribe button, and I'll see you guys.